Hey everybody, Sive here with the Forex Peace Army.com. Now let's take a look in the gold. So in gold, actually, you could see the same type of action as on other markets. On the Forex today, we mentioned low activity because investors are a bit waiting for some clarity, I suppose, and some uncertainty because the first wave of this of the news and actually that's mostly covered all markets and investors about the Iranian conflict is fading, and the rising the major question how long it will last and what we will get at the final point. And that is most difficult to forecast. Today's news from the Politica suggests that Pentagon intends to extend the length of this conflict for 100 days until the September, and that will be disaster for the Europe and for many other countries. Well, probably investors are not really relying on this news just because you do not see any reaction on that. In other circumstances, it might be probably rather strong. And forecasting on very consequences of such an events are useless because you can't foresee and can't forecast any results of the war and what else might happen in the region. And I suspect that this performance that we see currently is mostly indicates kind of the expectation, some waiting. This market stands on a pause, waiting what will happen, some maybe new inputs of the situation. But overall background remains supportive for the gold. Whatever retracement we will get here, it's probably we should get the chance for taking the position. In fact, as long we are getting down to the lows of the grabber that we have from the weekly, as we said previously, as will be better to us. For instance, I wouldn't be object too much if we'll get kind of the ABCD here down to nearly around 49, for example. This might be not actually bad. So also, we're gradually coming to the tomorrow data releases. We will get the payrolls, which might be really interesting, and investors could get some fresh breath on the markets after the really big amount of the purely political events. Currently, the situation stands not quite simple for analysis because on one side we have maybe a bit arguable, but this is still a grabber that we have on the spot market. We talked about this yesterday. On the 4-hour time frame chart, what else we have? On the back, we have solid confidence support that has been reached. And we have harmonic swing that also has been completed here with downside retracement. Theoretically, I wouldn't say that we do not have the background for possible long entry in general. And I wouldn't be state that market can't start upward action right from here. At the same time, on the opposite side, we have inability of the market to complete even minor OP target. So take a look what has happened recently. The market has reached the minimum extension, shows retracement, but after that, it wasn't going to the OP. It just turns to the sideways action. Yes, potentially in some longer term perspective, it could lead to the upward continuation and could work like the bullish dynamic pressure, something like this. But in the current circumstances, this might be the sign of the weakness. So this market, so we probably should forget about this possible head and shoulders that we were talking previously. It has not been realized, and from that standpoint of view, I wouldn't say that risks of the downside action totally eliminated. So with this bearish reversal swing that has been formed recently, which was relatively fast, so momentum of this drop relatively fast here. And on the background of this, I wouldn't say that we're totally out of the woods and should be prepared for a jump. So how this situation could be played in trading process? It depends on your risk aversion. So if you're an active trader and you usually make a lot of different trades with the small risks, you theoretically could consider possible position taking, I mean long position of course. But you should do this as close to these lows as possible. So in this case, you're making the bet on the reliability of the sideways consolidation. So your background will be to suggest that market will go out to the upside, and this will happen right from this consolidation. It means that your task to take position as close to the lows as possible, so you could be able to place very tight stops just below the lows, minimize your risk, because as you understand, here we do not have really great odds in our favor. And the only way how we could balance this is to minimize the risk as well. The only way how to do this is just to take the position very close to the validation point. That's the only way how you could do this. Another thing that you could try to apply is to use the stop buy order. For instance, play it somewhere outside of this range, and once market will start breaking it up, you will get the position. It also has some its own advantages and disadvantages, but this also might be one of the possible scenarios. But do not leave the stops through the night, because in the way of the fast spike here and drop, you'll be just trapped in the wrong direction without any control. It's better to apply stop orders when you're sitting in a monitor. So that's what about the short-term performance for active traders. If you're a conservative trader, I would suggest to do nothing and wait for a clear pattern that has good chances to appear relatively soon. So volatility right now on the market is rising, lots of news appearing every day, and that's a potential source of the new patterns that we could use. So in fact, our task here is relatively simple. We need to identify whether this overall activity will be a bearish continuation pattern, or we will get some preparation for reversal. That's it. In these points, we can't say definitely and confirm as the first one as the another one. And if you're a conservative trader, it means for you only one thing, that you need to sit in the hands and see when the clarity will come. So that in two words what we have from the gold. Yes, after all this performance, we're now entering some maybe a bit boring stage. This market come down on expectations, but this is the part of the process. We can't do anything with this. Just need to work in this environment and see for the signs as soon as they will appear.